Bond yields moving lower today after the Fed's preferred inflation gauge showed some signs of moderation. The personal consumption expenditures price index edged lower in August, pointing to progress in the Fed's fight against inflation. Yahoo Finance Fed reporter Jen Schomburger is tracking the data for us this morning. And Jen, the question everybody asks on the back of this is, what does this mean for the FOMC meeting coming up in November?
Good morning, Akiko. Yeah, the Personal Consumption Expenditures Index, or PCE as it's known, is the Fed's favorite measure of inflation. It is the primary gauge that the Fed analyzes for inflation, which is what makes it so important. So why is the Fed so focused on this particular measure? Well, for starters, it's a broader measure of inflation than other measures. For instance, it includes more data on healthcare, including Medicare and Medicaid. It also accounts for what consumers actually spend their money on every month, adjusting based on changes in spending. So, for example, if people decided that oranges were much too expensive that month and decided to switch to bananas, well, that's accounted for. And the Fed also likes to look at the so-called core measure of inflation that strips out volatile food and energy prices, which the Fed really can't control through their monetary policy mechanisms. Those are dictated more by global supply and demand. So that core number this morning clocking in below 4% for the month of August. Welcome news for the Federal Reserve, which has been looking for continued cooling trend in inflation. Akiko?
Yeah, we've certainly seen that relief reflected in market action so far today. Jen, we've been talking about the government shutdown, of course, the last day for Congress to pass the spending bill. We've got just over 24 hours to go here. But what would a shutdown mean specifically for the Fed?
Yeah, so this PCE number and other data that the Fed counts on that comes out and is collected from the government, everything from PCE to CPI, the jobs report coming up next week, that would all be suspended if there were to be a government shutdown. And that data would not resume collection until the government is reopened. So depending how long this government shutdown would last, assuming we do go into one, that means that Fed could enter the next meeting on November 1st, not having enough data to decide whether to raise interest rates or not. I asked Chair Powell about this at his press conference last week. He said it's too hard to say in advance what exactly we would do, but we would just have to, quote, deal with it.